On the show today, we'll explore how the African countries can ensure against extreme weather events. As always, you can join the conversation with the hashtag Beyond Markets, and you can follow my Twitter handle too at Esther Ubodaga. Now, the African Risk Capacity was established as a specialized agency of the African Union to help member states improve their capacity to better plan, prepare and respond to extreme weather events and natural disasters in order to ensure food security on the continent. Ekhosuehi Iyahen, Director for Policy and Technical Advisory Services at the African Risk Capacity, joins me now to better understand the operations of the organization. Ekhosuehi, thank you so much for taking the time out to join us today. Let me start with you helping us to understand what the African Risk Capacity does and how it helps member countries prepare for extreme weather events.
Okay, thank you so much. So the ARC, or as we commonly like to refer to it as, is really a mechanism which was developed by the African Union to find more efficient and sustainable ways of helping African governments to finance their response to disasters. And it came out of a recognition that when we have disasters occurring on the continent, for example, a drought, there's usually a delay in funding becoming available to support interventions for those who most need assistance. And so the idea was, how can we combine early warning systems with contingency plans and financing to ensure that when we have these events occurring, funding can be quickly released to support interventions and response efforts to those who have been most affected. So that's essentially what the African Risk Capacity is. As you mentioned, is a specialized agency of the African Union to really interrogate these issues and find more sustainable financing to assist our governments, but more importantly, the people who have been affected when these disasters occur on our continent.
Now, usually it will be the insurance companies, especially, for instance, in developed nations, especially the US, for example, that frequently experiences extreme weather, hurricanes and tornadoes. The insurance companies work hand in hand with the government of the US to, ensure that they come up with a proper framework in terms of costs of the extreme weather or the damage that's done after a major disaster. Where do insurance companies come in with the African Risk Capacity?
Okay, thanks. So when we look at our continent, it's also one that is significantly underinsured. And so that's also part of the driving mechanism behind the establishment of the ARC and our first financial affiliate, which is the African Risk Capacity Insurance Company Limited. So this vehicle essentially is an insurance fund through which African governments pay a premium to access coverage from the international markets. So the insurance company is actually quite innovative in the sense that it pulls risk across the continent from West, Southern, East, Northern Africa into a single portfolio. And then we take that to the reinsurance markets to get better pricing for our governments. And there's been a considerable appetite within the international reinsurance markets for the risk that's coming from the Africa Risk Capacity for a variety of reasons. Number one, it brings diversification to the international portfolio as it relates to risk from the concentration of risk that you see in North America, Asia, and elsewhere. But secondly, it's also about scale. And you have an initiative where you do have continental scale being brought to the markets through the African Risk Capacity. So in our first year when we launched, we had 8 reinsurers who were sitting on the portfolio for this risk. And currently we have 24 reinsurers and all the major reinsurers sitting on the portfolio. So I do think that there's considerable appetite within the international market for risk coming from Africa. But African Risk Capacity is about providing efficient and more accessible financing and coverage for our governments, but it's also sort of catalyzing the conversation that we're having within our governments about the development of the insurance sector. And so that's also where we hope to see the evolution of the mechanism in the coming years.
Now, for the advanced nations like the US, as I mentioned earlier, what we hear now is that insurance companies are having conversations with the government on how to perhaps review rates, because the climate events that we're seeing right now are more extreme and they're growing. And it would appear that the cost, they want to begin to take a second look at rates in terms of what the cost comes to at the end of the day, because it appears that it's a higher cost to the insurance companies now. So they want to begin to review rates. I'm just wondering, does that also apply to, for us here in Africa, the African Risk Capacity? Is that also something that could be a challenge for you?
So the issue of climate change is a very real one, and it's also part of what drove the establishment of the ARC. But I think that for us in the Africa Risk Capacity, on a year-to-year basis, we review the risk profiles within our government so that we can accommodate, yes, if there is an increase in the risk that we see within our individual governments, but also if there are improvements, how do we accommodate that into the pricing? But I also think that fundamentally, as I explained before, it's about scale, it's about diversification, it's about pooling, which Africa Risk Capacity does in a very efficient way through a continental vehicle. So yes, we do see an emergence of concerns as it relates to climate change, but it's something that we accommodate in terms of our technical work with our governments and also within our pricing. And so it's an area that we are actively working on. We've actually begun to also look at alternative mechanisms to support adaptation efforts that our African governments are also trying to contend with. Because the insurance, as it's currently structured, is helping our governments to respond on a year-to-year basis to weather shocks. But when we talk about climate change, it's a much bigger issue about adaptation plans, which means mobilization of a different scale of resources. And so we're looking to establish what we call an extreme climate facility, which will help to address some of those longer-term, deeper issues or deeper impacts that climate change we have. And so it's not a mutually exclusive argument. It's actually about how do we couple the different tools and financial instruments that we have to ensure that our governments have the best pricing for these tools to ensure that they're able to leverage them to do the work that is necessary.
Okay, well, speaking about work, I know that fundamentally the work of the African Risk Capacity is to help African countries prepare. So, but first of all, are there countries that are high risk for the organization that you consider as high risk?
There are countries which are high risk. I mean, our continent as a whole is significantly vulnerable to the impacts of climate change and weather risks. The fact is that as a continent, 80% of the population is dependent on agriculture as a source of livelihood. And so there is an imperative to actually proactively look at this issue. It's a risk, and as we seek to transform our economies to diversify away from these sectors that are highly vulnerable to climate shocks, we must also look to establish and put in place financial mechanisms to help the governments to undertake that transformation, and also individuals who are part of the sectors and build these economies. And so yes, there are countries which are high risk, but it also means that there is an even greater impetus to work with these countries to help them undertake that transformation that's needed to become more resilient.
Okay, now for extreme, let's stick with the extreme weather. Can you give us an example of a country that you've worked with that found itself in that position where the African Risk Capacity had to come in? I just want to get a clear picture of how it works.
Yes, so in our first year when we launched, we had Kenya, Senegal, Niger, and Mauritania who were part of that initial pool. And these countries placed their contract in May of 2014. And for those West African countries, which were Senegal, Niger, and Mauritania, by the end of the season, which was in November, December, they realized that they had a drought. But because they had placed their insurance contracts with the African Risk Capacity, their policies were actually triggered. And so for these governments, they were able to use those resources, which amounted to $26 million, to effect response very early on after the end of the season. And those funds were used to support over 1 million people in those countries that were affected and over 1 million livestock. So I think that there is a very tangible demonstration of how the mechanism works, which is if a government knows that at the end of an agricultural season there is a problem and they have access to resources, then it means that we can get those resources out the door to affected households before they begin to undertake negative coping mechanisms, such as taking children out of school, eating less preferred foods and things like that. And so the idea is that if we respond earlier, the impact of these events are considerably reduced. And so that represents, I think, represented the first example of how the ARC mechanism works. More recently, we've had a payout to the government of Malawi of over $8 million and also to the government of Mauritania earlier this year of over $2 million. And so the idea within ARC is we have started at this level, but how do we scale it up? Because the needs are are considerable within our countries. And so we also have to have a very frank conversation about how do we ensure that our countries are taking out more coverage. Because when they have better contracts in place and you have these events occurring, then more people can be supported. It's also important because in our conversation around, okay, how are we looking to develop and transform the continent, we also have to contend with the reality that the international financing available to support response efforts and humanitarian intervention is quickly decreasing. And so as a continent, we must find innovative ways in which we can begin to finance these kinds of activities, because they're fundamental if we're talking about economic development, economic transformation, and supporting people to become more resilient.
I know that you said that the conversations, I mean, it's important to have those conversations. I'm just wondering, at what point do you think the AU should really begin to have those conversations, especially around scaling?
Yes. So the AU has actually been doing a lot of work. I think that it actually exhibited a tremendous foresight in terms of establishing the ARC. And there's been a lot of conversation at the AU summit. And again, when we go to the AU summit in the coming weeks in Nouakchott, Mauritania, the issue of ARC will be raised. And how do we get more countries engaged around the mechanism? But beyond that, ARC has also initiated a partnership with the African Development Bank, which is also a very important institution on our continent, to find ways in which we can support those countries that are highly vulnerable but also face considerable fiscal and economic constraints, to support them with premium payments within the first few years as they begin to build that into the budget. And so these are partnerships that we're exploring with African Development Bank, our partners, and others, to see how do we begin to mainstream these kinds of what I like to refer to as public policy deepening investments to support these efforts that our governments are also making. I also want to touch on an important point, which is that in the last 4 years that we have launched these insurance pools, specifically focused on drought, the 8 countries that have participated in the mechanism have actually paid $54 million in premium. And this has come from domestic budgets. 95% of that has been from domestic budgets. So I do think that there is an appetite within our governments in terms of an understanding of the importance of these kinds of mechanisms and the role of insurance mechanisms in supporting resilience. The question is, how are we working with our governments to really tease out in a very explicit manner what these impacts are when we talk about climate change and weather events? And that's the work that we have been taking on as an institution with African governments, to really make this picture clear so that we can begin to be very strategic about the investments that we are making to guide a much more sustainable path.
Okay, Ekhosuehi, we'll take a quick break. Thank you for your time so far. We'll come back and pick up from where we left off. I've been speaking to Ekhosuehi Iyahen, Director for Policy and Technical Advisory Services at the African Risk Capacity. As we continue our discussion on how African countries can ensure against extreme weather events, my guest is Ekhosuehi Iyahen, Director for Policy and Technical Advisory Services at the African Risk Capacity. Thank you so much for your time so far. We talked about the number of countries in the last 4 years that have participated in this, of course, in terms of climate change, or rather insuring against climate change. You said that those countries, there's 8 countries, spent $54 million US, but that money, you said, came from domestic budgets. Now, we know that many African countries are grappling with budget deficits and, of course, looking to scale up domestic revenue mobilization. Do you think that going forward that this could be a challenge?
I think that, yes, it will always be a challenge in terms of, given the constraints that a lot of our governments face in terms of needs to also invest, and rightfully so, in education, health, agriculture, etc. But we also must contend with the fact that, as we had mentioned earlier, that climate change is a real issue. And so we must not think of these things as being mutually exclusive. As I indicated earlier, it's how are we looking to protect the investments that we're making. So if on a year-to-year basis we're investing in agriculture, but we're also not thinking on the counter side, which is for all the investment that we're putting in, are we ensuring that it's also climate proof, that it is that we have the wherewithal, that if a drought occurs, that we can actually cope with the impacts of that drought. So I do think that as much as the issue of domestic resource mobilization and the economic constraints and fiscal constraints are very real, it actually forces us to really also think about on the counter side, how are we managing that risk risks as well. And so that's what African risk capacity does. It's just to provide an additional tool or mechanism through which African governments can leverage to help them deal with those risks to protect those investments.
So what recommendations do you have in mind? I mean, if you're going to sit down and put this together to make it foolproof, as you said, what recommendations do you think, or quick wins that you can turn to quickly make it foolproof?
So we actually have an extensive engagement process with our governments when we work through trying to get to a point where a country can make a decision around their insurance contract. And the first point is trying to understand what is the risk. I think there's often an assumption that there is a very deep understanding of what this risk looks like in a lot of our governments, and for the most part that's not necessarily that's not work that's necessarily being done. And so we do spend quite a bit of time with our governments trying to understand what these risks are to the agricultural sector, what the risks are to low-income households who are dependent on the agricultural sector, and what does this mean as a contingent liability for the state. And from then, we can then say, okay, based on an understanding of what this risk looks like, where would the insurance mechanism fit in, and where would be the most efficient point to actually have that insurance contract structured. It's important to note that insurance is not a mechanism that you can use to cover all your risk. It's about identifying the sweet spot. And so we do that with our governments. But part of the conversation that we also have is trying to look at what are the other tools and mechanisms out there? What are the quick wins in terms of investments in risk reduction that our governments need to be thinking about and also making in parallel to investing in insurance mechanisms such as ARC. And this is a conversation that we have to have with not only ministries of finance and economic planning and disaster offices, but also line ministries such as agriculture, planning, etc., and also with partners who are often very active within this space within our governments. So the quick win is do the technical work to understand what the risks are, but also let's be innovative about finding solutions. The fact is that Africa is not the same as Asia or North America or Europe or wherever else. And the solutions that need to drive or need to support the response that we need on the continent must be homegrown and built on understanding of the challenges that we face. And so that requires innovation, investments in people, investments in the requisite infrastructure to support the kind of transition that we want to see. But that also means, a very sort of frank conversation with our government and a long-term commitment towards this process.
Well, talking about conversations, how about the private sector? Is that an area that you've looked to? And what role can the private sector play in this whole scenario?
We do have reinsurance partners who provide reinsurance coverage to the ARC insurance company. And on that panel, we do have Africa Re and Santam, as well as I mentioned, the other global players within the sector. But part of what we are now looking to do within the ARC is to engage governments around how do we deepen the local markets. Because by having a robust insurance market nationally and a continental robust insurance market, you also take off some of that liability off of the state, so that you have private sector entities also absorbing a portion of that risk. That's good for business, it's good for African business, it's the cultivation of a sector that's significantly underdeveloped. It's an opportunity, essentially, which we can significantly scale up on the continent. And so we're really looking to engage more with private sector actors on the continent. It could be reinsurance companies, it could be insurance companies, but it's also about others who are engaged in development, critical economic sectors. For example, if we look at the agricultural sector, yes, right now we are addressing the needs of low-income livelihoods, but what are we doing in terms of protecting the risk as it relates to cocoa production? Say if we're looking at Ghana or Cote d'Ivoire, where those commodities play a significant role in economic development. And so there are lots of opportunities, I think, across the board and across the continent, and it's really, the time is right for us to begin thinking about how are we really exploring those opportunities and driving innovation to create the kind of markets that we need to develop on the continent.
In terms of your relationship with the government, when you engage the governments to help them to see what the risks are and why it's important to ensure, I mean, we're talking about agriculture here, and of course the bigger picture is food security across the continent. What would you say the body language is typically when you approach governments? I know that for the ARC, it's members of the AU that are entitled to this, but when you approach government, what's been your experience in terms of what their body language is and the kind of suggestions that they come up with?
Yeah, I think the body language has generally been positive. we have 33 countries that are signatory to the treaty at the AU level. One of the challenges that we faced was when we launched the mechanism, we focused specifically on drought because drought risk is the primary risk to the agricultural sector that, across the continent. But our governments have also indicated to us that there are other risks which impact the sector, but not only agricultural sector, but other sectors as well, which are critically important to them. For example, floods. We've also seen outbreaks and epidemics, which can be devastating to economies, and other kinds of hazards. But to really develop insurance products that respond to these hazards, we have to do the preliminary work, which is trying to understand the risk again. And so generally, I think that the appetite is there to do the technical work, but there are challenges in actually teasing out in a very solid technical way what those risks look like. And then on the counter side, the fiscal constraints, as we mentioned earlier. And so this is why the partnership that we have with the African Development Bank, with donors, etc., is also quite important in making sure that we transition from not only understanding the risk, but developing products and ensuring that it's actually affordable and our governments can actually tap into them and leverage them appropriately.
I also imagine that, I mean, from country to country, it will be different. I know that, yes, risk across the board, and it also depends on what the kind of risk. I mean, there's agriculture, like you said, there's drought. But for some other countries, they might want to reprioritize in terms of, some might think that, okay, for us, it's flood. For us, it's recurring disease outbreaks, and maybe not exactly agriculture. So, I mean, how do you balance all that?
Yeah, we have to engage with our governments where they are. And I think that that is also the beauty of the ARC mechanism, in the sense that as an AU institution, we are obligated to engage with those governments that have signed the treaty to really try to identify what are their priorities. And then based on that and what we have available, see if it matches those priorities. And it's also what has driven the recent work that we have been doing as an institution to develop a flood product, to develop an outbreak and epidemic product. Those are all in response to the needs as expressed by our governments. And so it is something that we are working towards, and it's also something that you need a variety of partners to be engaged on. So as you rightfully pointed out, it's an area where we can and we should be seeing more innovation from the private sector to answer these needs, which our governments are also articulating. It's also an area where donors and partners who are traditionally also involved in the humanitarian space or even direct investments in various economic sectors are beginning to also wake up to this idea of, okay, our governments are now getting sensitized. How are we providing solutions for them to actually deal with this?
So look, because I know the ARC is in its 4th year right now. What is the big picture in terms of how you solve these challenges going forward, how you solve these challenges and how you begin to scale? So what is it that you want the ARC to look like in 10 years from now, in terms of how it would have been able to scale, adequately cater to each need, all the needs of the individual countries involved?
So in 10 years' time, we hope to have more countries participating in the insurance fund. I think that that is a fundamental issue, and it's an important aspect of what we do, because the more countries that you have in the pool, the better the pricing for our governments. It's also, I think, a very interesting and a very, I think, obvious indication that governments are being proactive about addressing these risks. But we also hope to have not only offering our governments a drought product, but as I mentioned, a flood product, an outbreak and epidemic product. But it's also about making sure that our governments have the requisite information to make informed decisions. And informed decisions is, yes, it could be leveraging the ARC mechanism, but it's also about exploring different kinds of options so that when we do have disasters occurring, that we are not seeing the kinds of pictures that we normally associate with these natural disasters when they occur on the continent, and that we're seeing one where we have an Africa that's more resilient, is able to independently mobilize resources to deal with these events, and is accountable to people who have been affected through providing direct response to them once they have been affected. So I'm hoping that in 10 years' time, we see a continent where ARC is playing an even greater role, supporting our governments through understanding risk, but also driving innovative products and tools, because I think that that is ultimately where we need to be going, which is African-owned solutions.
Well, finally, we have just 1 minute left. Do you think that going forward, climate change, because from the analysis and all the data that we're receiving now, would appear that we're in for tougher times ahead in terms of how climate change is going to impact on the African, not just Africa, across the globe, especially around food security? Do you think that perhaps that may be a first port of call in terms of the conversations to help make sure that the model benefits all that are part of it?
You are exactly right. I think that the issue of climate change is really driving home the importance. We're seeing impacts already. We've seen impacts in the Sahel. We've seen impacts in East Africa and Southern Africa. So there's a deep sensitization, I think, amongst our governments about this risk, which we are already contending with.
That was Ekhosuehi Iyahen, Director for Policy and Technical Advisory Services at the African Risk Capacity.